Sitting with Nick Pakulla, my preferred lender here in Howard County. Nick, the question I have for you now is talking about conventional financing. So everybody knows that if I have 20% to put down on a home, I have decent credit, I'm going to get a conventional loan.
Right.
But there are more conventional products than just 20% down, right?
Right, correct.
All right, talk about the different products that we have and how they differ with regard to our interest rates, our mortgage payments, our credit scores, that kind of stuff.
Sure. So conventional is sort of the Fannie Mae and Freddie Mac that you've heard in the news. That's basically conventional loans. They publish the guidelines. As long as banks follow Fannie Mae and Freddie Mac guidelines, you're able to sell loans for conventional, and that's summarized as conventional. So the huge benefit with conventional loans is, as compared to like FHA, for example, is kind of think FHA, Federal Housing Administration, government. Conventional is more private. So what that means is there's more competition, specifically when it comes to mortgage insurance. Anything less than 20% down, you do need mortgage insurance. However, there's a number of mortgage insurance companies. Most banks work with several of these companies exclusively, and they compete so that the mortgage insurance factors go down as the competition heats up. FHA is sort of one size fits all. There's no real competition. It's just Federal Housing Administration provides mortgage insurance. Conventional, you have a bunch of different companies. So
let me ask a question. So if I'm getting a loan, I'm pre-approved by XYZ Bank, and now I've got a home under contract and I want to go compete. I want banks to compete for my business.
Right.
It sounds like most of them are probably going to give me the same interest rate or very close to the same interest rate. More of what I'm looking for is what is the mortgage insurance going to be based on my qualifications?
Yeah, the complete package. I guess more conventional versus FHA. That's the benefit.
Okay. But if I'm comparing conventional to conventional, Bank of America
Correct.
to Wells Fargo to your bank, there could be a difference. And maybe to me, maybe it's just what's my mortgage payment. It doesn't matter where that comes from.
Right.
But it's probably, what you're saying here is that it possibly or probably comes from the mortgage insurance side of things. Not necessarily that it's just the interest rate.
Both of those are
okay.
Both of those, because it's private mortgage insurance, is PMI is sort of what it's summarized as. The benefit is there's different ways to structure it. So you can build the mortgage insurance into the rate. So for tax purposes, you can effectively get more, possibly depending on your situation, more of a write-off when you build the mortgage insurance into the rate instead of paying it monthly. If you pay monthly mortgage insurance, depending on how much you put down, if you put down as little as 3% nowadays with conventional, your mortgage insurance factor is a little bit higher than if you put down 5, 10%, 10%, or 15%. But the monthly mortgage insurance version will always fall off once you get to 22% equity is the number that's federally mandated. But at 20%, you can request it. You also have benefits if your home value increases over the time that you're living in the house. You can call up your servicer and say, hey, I think my value's up. I think I have 20% equity. Okay. You can actually get that mortgage insurance canceled sooner. So many different ways to structure it with conventional loans. You can build into the rate. You can pay for it up front. You can also pay monthly mortgage insurance that will fall off eventually in the future.
So mortgage insurance sounds like the key word here that we're talking about when it comes to the different down payments that we're putting in, the advantage between FHA and conventional. Correct. In that we can get rid of mortgage insurance eventually through conventional. We can't get rid of mortgage insurance if we're in an FHA loan. Correct. You would have to refinance into something else, right?
Exactly.
Okay. And then so you can go as little as 3% down?
Yeah.
And you can go as high as you want, right?
Yep. You could
what about, I know that there are some restrictions on closing costs that I can get from the seller.
Yes.
So what are the restrictions conventionally that I can get from the seller?
Currently with conventional financing, it's tiered based on how much you put down. So if you put down less than 10%, you can get a max of 3% seller help.
Oh, okay.
Whereas FHA, you can actually get up to 6%, which in our area, that would usually be excessive. You wouldn't need that much, but you can. So conventional, 10% down or more is up to 6% or higher. Less than 10% down would be 3% max.
So conventional, if I'm putting more than 10% down, I can get up to 6% in closing help. But can I use any of that towards my down payment?
No.
So that has to go all towards my
Has to go
close,
towards
separate costs, has to do
Right.
something other than the loan.
Yep, in our area, average closing costs, just generally speaking, around 3.5% of the sales price,
Okay.
all in. So you want to be very careful. You don't want to ask for more,
Right.
Because then you're sort of left last minute trying to scramble to rewrite the contract, and it complicates things.
Right. And buyers realize when you ask for closing help, you're essentially just lowering the price of the seller. It's all about the net amount of money that I'm getting for my home when I sell my home. So you want to be smart about how much money that you need to get to the settlement table, and don't be greedy and go for all 6% if you don't need it. Because here's the thing, if we only need $10,000 but we're getting 12, if we can't use that extra 2, it goes back to the seller anyway. So be smart about knowing what you need, and that way your offer is structured in a way that has max benefit to you and gives max money to the seller at the end of the day.
And you have to be a little careful too during a home inspection, for example, if you're going to ask for a credit for something and you're already getting the max, that's not going to work.
There is no
as
credit.
well.
You can't get it.
You can't get more than the max.
Got it.
And
The max is
any
the
of
max no matter
programs.
where it comes from.
Right.
Okay. Very good. We'll do a video on that, but the max is the max no matter where it comes from. Anything else we need to know about conventional? Do we hit all the high points?
I mean, we can get into investment properties in another
We'll do that.
video, but yeah.
All right, there you go. That's a conventional loan.